All right, let's jump right in. Today we are talking about a really bold prediction for one of the biggest names in tech, Meta. You know, the company behind Facebook and Instagram. A big financial advisory firm is asking a pretty wild question. Can Meta actually more than double its value?
And that's really the heart of it, isn't it? Can Meta, the social media giant, really become a $4 trillion company? That's the multi-trillion-dollar question we're digging into today.
I mean, just look at that number. $4 trillion. It's almost impossible to wrap your head around. Hitting a number like that puts you in the most elite corporate club on the entire planet.
And when I say exclusive, I mean really exclusive. To get a sense of just how massive this goal is, you've got to look at who's already there, because let me tell you, it is a very, very short list.
Okay, this chart right here really tells the story. You can see Meta sitting at about $1.67 trillion, but the target, way up there at $4 trillion. That is a gigantic mountain to climb.
So who's actually done it? Who's at the top of that mountain? Well, according to our source, there are only three. You've got the AI chip king, NVIDIA, the consumer tech legend, Apple, and of course, the search giant, Google. That's it, the whole club.
So, yeah, it's a heck of a climb. But the people making this prediction think they see a path. So let's look at the optimistic side, the case for growth. What could possibly get Meta to that incredible number?
Well, the first big piece of evidence for the optimists is this number, 24%. That's how much Meta's revenue surged year over year recently, hitting almost $60 billion. I mean, that absolutely smashed what analysts were expecting. It just shows you the incredible money-making power they still have.
And it's not just about what they've already done. Looking ahead, the company's own forecast was incredibly bullish. They projected a potential 30% jump in revenue for the next quarter. That's some serious confidence coming from inside the company.
So what's the secret sauce here? Well, it's this really powerful cycle. First, they're getting smarter with artificial intelligence to make more money from their platforms. That AI also helps create a better experience for you, the user, which keeps you on the platform longer. And of course, the more time you spend there, the more ad revenue they generate. It's like AI is the engine driving this whole machine forward.
But okay, let's pump the brakes a little. It's never a straight shot to the top. For every bull, there's a bear, and Meta is definitely facing some pretty big hurdles that could throw a wrench in this whole $4 trillion dream.
You know, the math itself is a huge challenge. To get to $4 trillion, Meta needs to grow at a rate of 14.2% compounded every single year. For a company that's already this huge, keeping up that kind of pace for years and years, that is an incredibly tall order.
And remember, this company doesn't exist in a bubble. Its success is tied directly to the health of the global economy. If things slow down and companies get nervous, what's the first thing they cut? Usually it's their ad budgets. And they would hit Meta right where it hurts, its main source of income.
Now, here's where it gets really interesting, a fascinating little twist. The very same firm, the Motley Fool, that published the article with this huge prediction, well, their own expert stock-picking team did not include Meta in its top 10 list of stocks to buy now. It's a bit of a contradiction, right? And it definitely makes you raise an eyebrow.
So, with all this talk about the future, let's bring it back to the here and now. How has Meta's stock actually been doing lately? What's the real story?
This timeline really tells two different tales. If you zoom out and look at the last 5 years, it's been fantastic for investors, a 144% return. But if you zoom in on just the last year, it's a different picture. The stock has actually lost about 7.8%, which shows you just how volatile it's been recently.
And this table gives us an even closer look. So far this year, the stock's up a little, about 1.7%. But look at that range. It's been as high as almost $800 and as low as $480. It has definitely been a bit of a roller coaster for shareholders.
So, when you boil it all down, it really seems to come back to one thing. All the arguments for growth, all the potential problems, they all point to artificial intelligence. Meta is betting the house on AI. So the big question we're left with is this. Is it a $4 trillion bet that's going to pay off big time, or is it a gamble that's just too big to win?